America's housing market is shaking, and it's being felt right down to its home building foundations. This is Sectors Up Close, and we're talking about US home building. This summer's housing market has been anything but hot. Home prices continue to rise even after a recent pickup in inventory, and would-be buyers aren't biting. Potential buyers are deterred by high mortgage rates and anxiety about the economy, while builders are facing higher costs for many building materials. In the south, the nation's biggest home building region, confidence is at its lowest since 2012. It's a perfect storm, but can the sector weather the damages? Let's ask Randy Watts, Senior Portfolio Manager at O'Neill Global Advisors. So Randy, mortgage rates hit the lowest level since April last week on increased bets of more cuts from the Fed. If the US Central Bank doesn't continue cutting, will anxious house hunters stay on the sidelines?
I think they likely will. One thing to remember is at the beginning of the COVID pandemic, interest rates fell to a very low level in the US. As a result, about half of homeowners have a mortgage that's 4% or less. And with mortgage rates right now between 6 or 7%, that's really keeping a lot of people on the sidelines and not changing their home. So we do think that for the housing market to reaccelerate, it is going to need some help from the Fed in terms of lower rates and lower mortgages. We think under 6% would be a significant number.
Meanwhile, builders anticipate that President Trump's tariff policies could boost construction costs by almost $11,000 a home. Will construction firms be able to survive these extra expenses?
We think they will be able to survive. $11,000 when you look at the total price of a U.S. home is not a huge number, but I do think it's going to continue to pressure margins. Right now, the home building companies in the U.S. are being pressured both by higher costs, but also they're oftentimes having to give incentives either in the form of lower prices or helping new homeowners with their new mortgages in the form of a pay down or incentive there. So I do think margins are going to remain under pressure for U.S. home builders.
Are those incentives really helping the home building companies, what we saw in the recent earnings reports?
I think they are. You know, most companies actually had better results than anticipated on both the revenue and the earnings line. Where most of the companies that reported had weaker numbers is actually on order intake. So new orders continue to lag, but the companies are weathering this sort of slow market relatively well.
Of course, Randy, labour supply is crucial, and new immigration laws are expected to hurt the sector. Could we see a reduction in construction times and completed projects?
I think that's possible if the housing market gets hot again. Right now, it's not so hot. New home supply is about 4.7 months. That kind of shows a market relatively in balance. But if that number keeps going up and to a little bit of a slower market, then I don't think the lack of labor is going to be a big problem. If the housing market was to get very hot, I do think the new immigration laws could pressure construction costs in the form of higher labor rates and a shortage of labor.
The weak housing market has got the attention of President Trump. He said he's considering a proposal to end capital gains taxes on home sales. Would this help the housing market?
I think it really would. If you remember, in America, the largest asset most people own is their house. It's really a form of their greatest savings. We think if they were to eliminate capital gains on primary residence home appreciation, that would provide an impetus for people to change their house. So I think that tax change, along with lower rates from the Fed, could reignite the housing market next year. But right now, we're kind of in a holding pattern until something changes.
Let's look closer at that holding pattern. Some analysts have said there's not much room for optimism for the second half of this year. Do you agree?
I don't, because if you look at the CME odds right now, there's about an 88% chance that the Fed is likely to start lowering rates again this September. So I do think that means that 30-year fixed mortgages could be lower in rate by the end of the year. And I think that could provide stimulus to the market. So I'm optimistic, actually, that we can start to move out of these doldrums with lower mortgage rates.
That was Randy Watts from O'Neill Global Advisors. Don't forget, you can watch more videos on Reuters.com.